Hello, good afternoon. It's Adil Fazal here, market analyst at CFDs.com. Apologies for the first video that had no sound. I'm remaking the video, or attempting to redo the video, and certainly posting this out. Be sure to visit CFDs.com for your trading needs and certainly take advantage of the 25% cashback bonus offer, and that should help in your trading, especially in these volatile times, in these volatile markets. Alternatively, visit www.cfds.com for your trading needs. And visit www.cfds.education for your educational needs. Okay, the European markets, how are we faring? How is the market doing? Let's try and decipher. Okay, so net, so far, or thus far, the markets certainly remain in the red and certainly are weak. Your FTSE itself is down, currently trading around the 5800 after obviously hitting a pivot high of 5850, I think it was intraday. The DAX certainly was high, up 100 points at one time, again is certainly trading negative along with the CAC. So overall, European markets net are negative. Now, that was mainly due to the fact that the Asian markets, you had the Nikkei down 1.1% overnight, the Hang Seng down 1.45%, and the Shanghai was actually up by 0.5%. So how do we interpret that? So let's bring up the charts of the Shanghai index. As you can see, the Shanghai is certainly into support here, holding support. Now, we do have Chinese GDP data out overnight. That will obviously dictate sentiment and move the market. So that's going to be a major sensitive data point. Now that is out overnight at 2 o'clock in the morning, so that should be that will be the main focus really in terms of markets and sentiment and market bias. But for now, in terms of economic data today, the main point, as we all know, is the Iranian sanctions being lifted, and that's obviously triggered off a risk-off tone. And given the fact that oil prices certainly have been hurt. Now, looking at the Nikkei before I move on to the price of oil, which is going to be quite important. The Nikkei certainly is holding that gap level and certainly is holding well, and we are looking for a thrust higher. So the Shanghai and the Nikkei into support would indicate, or to me anyway, that we are into a bullish bias. Now, moving on to oil. Now, oil prices are obviously key, and there's a very important point that I want to share with you. There's the old adage that you sell the news by the rumor, if it's obviously in the bearish direction, and by the rumor, sell the news, obviously, if it's a bullish direction. Now, if you look at the chart of oil thus far, you can see that you are putting in a potential doji, okay, which is generally a good sign, okay, given the fact that you had this Iranian oil news, obviously excess supply onto the market, etc., etc. It gapped lower, sold off, put in a bottoming tail, and has actually closed the gap. That's a positive sign. That's a bullish sign from my perspective. The fact that it actually went and closed the gap, it generally means that all the news is already baked in, okay? If the news is already baked in, then you are looking for a potential short squeeze and a rally, okay? So as you can see here, no lower lows, even with the Iranian oil news, and you can certainly see we've closed the gap and obviously pushed lower, okay? Again, that's being interpreted from my perspective as being bullish, and that will be bullish for oil, okay? Now, the dollar is the main X factor at present, given the fact that the dollar obviously in the weekly chart has taken out the previous high and made new highs. So again, that's a cause for concern because we need to have the dollar in check in order for commodities to really start to rally. So for a real bottom and pivot in oil, we need the dollar index to certainly stop its rise. Now, given the fact that we had weaker data out on Friday from the US, that certainly will hinder the rally in the dollar. Okay, given the fact that the Shanghai has obviously held 0.5, or actually up by 0.5% overnight. Also, given the fact that the Chinese yuan now is potentially under control, and given the fact that the PBOC has confirmed that there's no further devaluation, not only that, they've actually gone after the short sellers, okay? In terms of the excess, obviously, liquidity and volatility in the yuan, they are trying to control that. Now, they are warning, not warning, but they are trying to confirm that the GDP will be ranging between 6.5 to 7%, and that's not bad. That's not bad. All these sayers and naysayers, etc., and gloom and doom, etc., stating that China is obviously faltering and China is breaking. That's not exactly breaking territory at 6.5 to 7% when the Chinese premier himself is stating that's where the range will be. So again, that will trigger a short squeeze, okay? Mr. Abe as well, overnight, we had the Indian PM unveiling potential stimulus package for new businesses. Mr. Abe talking about a new stimulus arrow, which will obviously affect or help global markets. Japan investing back into the pensions. Again, that's going to help equities as well. Mr. Moscovici talking up QE this morning as well, certainly stating that a lower, obviously, interest rates and lower euro certainly is helping trade. So overall, I think net the news flow itself has been positive, not as bad as everybody was making it out to be, in terms, especially given the fact that the Middle East markets certainly were, or Gulf markets were under immense pressure. Okay, so. And the latest news flow states that OPEC production dipped in December, but price pressure persists. So the glut certainly seems to be ending, and certainly an indication that we are looking at a potential bottom, okay, with regards to the price of oil. So if we have a pivot low in oil, that should certainly help, and also if we have a pivot low in the yuan, then that should certainly help the equity market. Not only that, you also have a pivot top in the yen. Okay, so again, that's an interesting factor as well, which I'm not going to discuss for now. Let's just continue to move on in terms of trading. Now, let's look at the actual indices now, and let's look at the actual price action and see exactly where we stand. Now, looking at the chart of Euro Stocks, if I go to the weekly chart, you can see that we are into support on the Euro Stocks on the weekly chart. Therefore, you are looking for a potential short squeeze. Daily chart still remains vulnerable, given the fact that thus far we are still trading below that key support line. But I expect that market to retrace and certainly push higher. The 60-minute chart itself, yes, we are holding previous support equals resistance. We have this downward sloping diagonal trend line, but I am expecting a potential falling, contracting wedge type pattern here, and looking for a potential short squeeze higher, especially with Mr. Moscovici's statements as well, and certainly looking to potentially thrust this indices higher. The base is being built, no lower low has been made all morning, therefore again that's a positive sign, and it's a perfect catalyst for a short squeeze. Okay, now cross-referencing the Euro Stocks and 50 with the S&P Europe 350 again, looking at your weekly chart, you can see that you are into the 200 MA support, horizontal support, therefore arguing for a rally in the Euro Stocks and obviously European indices in general. The weekly chart, let's go to the weekly chart of the Euro Stock 600. Again, you are slam dunk into the 200 MA. You have horizontal support, looking for a potential rally. Going over to the German DAX now, which is quite important. Obviously, we all know German DAX dictates Europe. The German DAX is holding that gap fill support. Okay, so that's a good sign. Okay, holding that gap fill support is putting in a doji and trying to build a base. The 60-minute chart is certainly awkward, given the fact that you are holding previous support equals resistance, diagonal key trend line. Obviously, two intersecting diagonal trend lines are holding that resistance zone. But given the fact that the 10-minute chart is actually building a base, as you can see here, no lower lows, you are looking to potentially propel higher. That's my interpretation thus far. Now, looking at the MDAX 50, again, you have horizontal support, looking to potentially move higher from there. Tech all share, this is obviously been looks very vulnerable at this juncture again. But you do have horizontal support here and here, and you are looking for that to potentially hold. Okay. Now I haven't done the analysis on US markets. When I do, you'll realize why I'm bullish on the Nasdaq and why I expect tech all share to certainly rally as well. Okay. Now looking at the volatility index is quite important. The weekly chart, as you can see, the volatility of V stocks, which is Euro stocks, certainly very, very high into uncharted territory. 60-minute chart looking at a potential double top. So again, certainly a good indication for European stocks to rally. 10-minute chart, you clearly see the double top. So volatility index in Europe certainly coming into resistance. Again, the French CAC volatility index again is into resistance, therefore bodes well for European stocks to potentially rally. Going up to a 60-minute chart, you can see that you are struggling at this juncture to potentially thrust higher, and a 10-minute clearly shows a double top. So again, that bodes well for European stocks. Okay, looking at the French CAC now, going over to the daily chart, or the weekly chart. The weekly chart is slam dunk into the 200 MA, generally an area where hedge funds will potentially look to close out shorts and look to start entering the market, especially with QE backdrop. Mr. Draghi put, you are looking at buying European stocks. I would not be an individual who's shorting European stocks. I'll be an individual who wants to go long on European stocks. Okay, so the daily chart, obviously looking at the horizontal support, looking to hold. 60-minute chart on the French CAC, let's just connect these dots together in terms of the diagonal trend lines. And again, you have this downward sloping diagonal trend line obviously in play. So these are the downward sloping contracting wedge looking to potentially break out. 60-minute, you have a bullish engulfing candle here now, and we're consolidating within that zone. 10-minute chart, no lower low has been built. Obviously, you're looking at a potential base being built here for the French CAC, and then looking to obviously thrust higher. So again, all indicating a move higher. Okay, looking at the cross-referencing that with the CAC mid 60 itself, again, if you go to the daily chart, you can see you're into support. Weekly chart, you can certainly see you're into horizontal support. Previous resistance equals support as well, so again, an area where you are looking to bounce. CAC mid and small, you are looking at a gap fill support on the CAC mid and small. If you connect this a diagonal trend line here or horizontal line, and you are looking at gap fill support, so therefore looking at a potential bounce. Okay, so on the French CAC as well. Okay, also there was a comment out from Mr. Hollande. Francis Hollande announces new job creation measures. That's obviously a potential stimulatory measure, and that's generally positive for European equities, so look for a potential thrust higher there as well. So no, he's not stepping down to create a job for someone else, much to some people just raising issues aimed at providing subsidies to small and middle-sized firms to encourage them to hire young and unemployed people. So again, any type of stimulus from a fiscal stimulus, or whether it's from the government itself, is generally considered to be positive for the equity market. Okay, now we've looked at the French CAC. Let's bring up the have we looked at the DAX? No, we haven't looked at the DAX. Oh yes, we have looked at the DAX. Okay, FTSE 100 now. Let's move on to the FTSE itself. Daily chart, the FTSE 100, you can see that we are holding that pivot low support zone. So therefore, you are looking for a potential rally here as well. The weekly chart, obviously, we have seen that we are into horizontal support there. Daily chart itself for the FTSE 100, you can clearly see 60-minute chart, the FTSE. Yes, we are holding previous support equals resistance, and we are below that diagonal trend line, which is a concern. But from my perspective, given the fact that oil price is behaving the way it is, and early indications of a potential pivot low, you are looking at a move higher on the FTSE itself. You haven't made lower lows, so therefore that must be respected, and you are building a potential base for a thrust higher. Okay, and if you cross-reference the FTSE with the chart of the FTSE 250, you'll see that's into support as well. The Aussie, for example, if I bring up the chart, the Aussie USD on the daily chart, you can see that we are potentially holding that pivot low support. Bring up the chart, the Kiwi on the daily chart. Again, you are looking at potentially holding that pivot low with a bottoming tail as well. So again, you are indicating, or early indications of a dollar top. Obviously, Asian markets into support. Even if you bring up the S&P 500, you have an inverted head and shoulders on a 10-minute chart. 60-minute chart, you have this downward sloping contracting wedge type pattern, looking for a potential breakout. Daily chart itself, obviously bottoming tail, looking at holding horizontal support. Generally good, bodes well for European indices. Weekly chart, obviously into horizontal support. That certainly bodes well as well. So everything from my understanding and my perspective, European stocks certainly into support. As subscribers know, I am long the Euro stocks, and I have a long bias at this current junction. I'm looking for a potential thrust higher. Okay, so that's basically a summation of European indices for this morning. Also observe the Euro USD, folks. Okay, this is going to be absolutely crucial in determining whether or not European indices go higher or lower. Given the fact that we've been holding this 1.0980 level for some time now, we've been consolidating below it. If the market obviously decides to drop from here, obviously that's bullish for European indices, and you'll see a rally in EU equities. If we see a breakout of this 1.0980 level, then that will be a cause for concern. Your next resistance zone is going to be seen at the 1.0505 level, I think it is. Okay, yes, and that will obviously butcher European equities. So again, that's certainly an area to observe and watch out for. Okay, I think that's a good summation for European indices for today. Obviously, US markets are on holiday, so we shall see. Trade well. I wish you the very best in this trading week. Currently up 80 points this morning, so quite happy. And I am looking for a bullish move on European indices for the remainder of the day. Okay, so trade safe and be sure to visit cfds.com for your trading needs. Goodbye now.